MoneyFM 89.3, the best of the afternoon update. Money in the Market on MoneyFM 89.3.
Welcome to Money and the Market. I'm Hong Bin Jung. The concerns of a possible recession loom large on the horizon. In fact, the recent banking turmoil with several lenders collapsing, the stock market has become more sensitive and reactive, and more investors are now reevaluating their investment portfolios to mitigate the effects of market volatility. So, what are some of the considerations, and how can retail investors like me and you prepare their portfolios for the current investment climate? Well, joining us on the phone today to tell us more is Eric Lee, who's a wealth manager at Phillip Capital. Hi, Eric. Welcome to the show.
Hi, Hong Bin. Thanks for the invitation.
Thank you for joining me today. Okay, so, why are we in the state of market volatility? I mean, what factors are moving markets so that it's so volatile?
I think one thing is that for us to take note is that the market is always in a state of volatility, and that's how it gave us an opportunity to buy shares at a low price and sell shares at sell the investment at a higher price. But possibly one of the factors that investors may feel that market is particularly volatile now is probably because of the conflicting news that we are often getting lately regarding the state of the economy. We can be seeing that the market reacting a certain way, and the economic news giving us different data points pointing towards growth, sometimes pointing towards growth, and sometimes pointing towards recession. And even just recently, back in March, during his Congress hearing, the Federal Reserve announced that the interest rate is not high enough, and they want to increase some more. So that really caused jitters in the market. But shortly after that, we will have the news of the Silicon Valley Bank and Credit Suisse collapse, and that also then caused the regulators to sort of reverse what they have stated regarding the tightening policy.
Right.
And so I think these are the various factors that really cause the market to be in this state of volatility, and also causing more question marks to investors.
Okay. So, I mean, how bad is this current market volatility? Is this something that we've seen before?
I probably will not think of it as being good or bad. It can be both good and bad. It really depends on our perspective. I'm sure to a short-term trader, volatility is good, right? They give them more opportunities to get in and get out of the market.
Right.
To the long-term investors, it really also depends on the stage of our life. To the young, volatility is good because if there's a downswing, it actually helps them to be able to buy into very attractive investment at an attractive valuation.
Okay.
But perhaps to those who are in the stage of maybe closing towards retirement, they will then probably not like the volatility, as they probably will need to use the fund for the retirement use. As of the current market volatility right now, I actually think that the volatility is quite manageable. Right? It's not particularly volatile, and in fact, if you were to refer to the VIX index, which is commonly referred to index when it comes to following the market volatility, is currently trading at a 52-week low. So not really pointing towards a high volatility market condition.
Okay. So how does the current investment climate differ from the market conditions we have experienced over the last few years?
I think in the sense globally, what happened 2 years ago in terms of the COVID-19 pandemic has really significantly impacted the investment climate and market conditions. So we all know that what had happened, and then how the regulators and how governments over the world has responded to this pandemic. And then they responded with unprecedented levels of monetary and fiscal stimulus to support the economy and the financial markets. And because of all these levels of policy, there are certain sectors that actually get to benefit from it, like the technology and healthcare, have performed relatively well during the 2020 to 2021 period. And whereas other sectors like the travel, hospitality, and energy really struggled during these 2 years. But now that the COVID-19 has is transiting to endemic stage, we are actually seeing the reverse. Like we're seeing that the technology is not doing so well, and the travel, the hospitality and the energy sectors are doing relatively well. So recently, with all that's been going on, the market has been more or less expecting the Fed to come to the close or reaching the close of the interest rate hike. So perhaps the wind of change may affect the market again, and then probably moving away from the hospitality, energy, and probably towards back to technology again, especially if the Fed were to start to lower the interest rate.
I see. Then, do retail investors need to make a concerted effort to respond to the prospect of market volatility then?
Yes, I think retail investors, one way they can respond is by diversifying their portfolios.
Okay.
And especially if they are focusing more on the long-term investing. So they can do so by investing in a mix of different asset classes and industries. And this can also help to spread their risk and potentially reduce the impact of the market volatility on their overall portfolio. So they can also do so, by diversifying. They can also help them to avoid making emotional decisions, right? So always, and so that it will not knee jerk to whatever news or rumors that comes along. They will then cause them to deviate from their trading plan.
Okay. I mean, diversifying your portfolio is very important, but how can investors review their portfolios to prepare themselves for the prospect of market volatility then?
Okay, I think one way to do so is, of course, if the investor do not have the time to do so, then they can engage financial professionals to discuss with them on their investment goal or rather on their financial goal as a whole. And then from then onward, they can then probably draft out investment plan and be diligent in following the plan. Don't deviate from it. I mean, there may be one or two down year because of market condition, but don't be affected by what's going on. Over in the long term, the assets like financial assets like stocks and fiscal assets like property, this will definitely do well over in the long term.
Okay. And what are some of the sectors then that are considered fairly safe during this time of market volatility? Maybe some of the sectors that investors can take a note of to add into their portfolio?
I think traditionally, of course, defensive sectors that the market always refer to are the consumer staples, the utilities, and healthcare, and also for those investors who are looking for income, then they can also consider real estate investment trust, who will then be providing them with regular income. But for those who are probably a little bit more long-term minded, we should not forget about technology stocks as well. Especially, I think there's been lots of talk about the ChatGPT, about AI, and even for the EV and this renewable energy. These are still ongoing technology change. We have not really fully come. The economy hasn't really come to see the maturity of these sectors as well. And going forward, definitely these are the sectors that will continue to cause the change in the way we live, the way we work. So if those who can have a little bit more longer time frame and can take a little bit more volatility, they can also consider such investment into such sector as well.
Okay. Every investor have their own risk tolerance, and we hear experts saying you need to follow your risk tolerance, you need to determine your risk tolerance in order to prepare your portfolio. So how exactly can investors determine their risk tolerance and ensure that their portfolios are appropriately diversified according to that?
Okay, one very layman way of doing it is that to be able to invest and have a good night's sleep. So if you find yourself buying some investment and then you can't help but think about it, wake up in the middle of the night to check your phone and how's the share price doing.
You don't want to stay up all night, Yeah.
So in that sense, I think every investor will have a different sleep number. Some who are more risk averse will probably need a number that's much lower. So this is something that speaking to a financial professional will help. Especially they have the tools to help you run through your finances. But ultimately, it all boils down to individual investors to work it out themselves on the right mix of investment. Yeah.
Right. So, I mean, you've mentioned that you should speak to, financial experts if you really don't know what to do. So, how do financial houses like Phillip Capital help clients optimize their investment portfolios to suit their investment goals and strategy?
Yeah, financial houses like Phillip leverage on various tools and techniques to offer clients customized investment advice and management that will align to their investment goals and strategies. So some key areas that Phillip Capital focus on is like, for example, investment analysis. So our professional will take time to analyze the investors' current portfolio and determine if it's appropriately diversified and if it aligns with the investment goal. So, and also in terms of asset allocation, we work closely with the investors to determine the appropriate allocation to the portfolio. We share our knowledge and share our view so that to help them understand the potential risks in these various assets that they invest in, and also to help them to select out of the products out there, what is the right mix. Like this mix could include stocks, bonds, mutual funds, or exchange-traded funds. And some alternative investments, maybe like the cryptocurrencies for those who are game for it as well.
Okay. Well, thank you so much, Eric, for your time and your insights today.
Yeah, no, thanks a lot. Thanks for inviting me.
Thank you. We've been speaking with Eric Lee, who's the wealth manager at Phillip Capital. Stay with Money FM 89.3.
To listen to more great interviews, download our podcasts at moneyfm893.sg or download our audio app. That's AWEDIO. Available on Google Play or the App Store.